Hi there. If you work as a painter or decorator, understanding CIS boundaries can help you report work correctly and confidently.
Right, welcome. If you're a UK director of a small, limited company in the painting and decorating trade, you are in exactly the right place. Today, we're unpacking HMRC's construction industry scheme. Honestly, this is one area of compliance where a single, simple paperwork error can literally cost your business tens of thousands of pounds. So I'm going to give you the ultimate explainer on exactly how these rules apply to your specific trade. Look, we know how it is when you're managing multiple sites, trying to source materials, and dealing with non-stop client demands. It is incredibly easy to just let administrative checks slip. But if you regularly engage subbies or actors on yourself, the precise lines drawn by HMRC absolutely dictate the financial health and survival of your whole business. Let's dive straight into why this matters with a shockingly common, real-world scenario. Imagine this. You bring a subcontractor on site in a rush to hit a really tight program deadline. The paperwork gets delayed because, well, it's the real world and things happen. So you pay their £50,000 invoice unverified. What's the damage? Well, that single unverified 50 grand payment can cost you, the contractor, £10,000 in unremitted deductions. 10 grand. And that's before HMRC even thinks about adding penalties or interest charges. It's a bill that lands squarely on your business, not the subcontractor. We see this all the time with growing SMEs who rely on a quick handshake to get boots on the ground, only to find out later that the massive cash flow hit completely wipes out their profit for the entire quarter. So, who am I to be telling you all this? I'm a highly experienced UK tax expert representing Atlas Tax Advisors, or ATA. We're a UK accounting firm entirely dedicated to advising businesses exactly like yours on precise tax planning and strict HMRC compliance. Today, I'm here to guide you safely through this compliance minefield. We're going to make sure your business is fully prepared for the 2026-27 tax landscape, so you can confidently protect your margins, your working capital, and, let's be honest, your peace of mind. Okay, here's our roadmap for this explainer. First, the true cost of CIS mistakes. Then, understanding the core framework, the crucial difference between inside and outside scope work, the VAT reverse charge rules, and finally, compliance and how ATA can support you. Let's get into it. Section 1, the cost of CIS mistakes. Because the margins for error here are shrinking even faster than your profit margin on a badly underquoted job. I really want to highlight something absolutely crucial right off the bat. Most CIS compliance failures, they aren't deliberate tax evasion, not at all. They are almost always just the result of process gaps. You know, things that worked totally fine when your company was smaller, but simply weren't maintained as you scaled up and took on larger commercial contracts. Many companies encounter this exact issue when reviewing their tax position. It usually happens when a sole trader incorporates into a limited company, scales up fast, but keeps using that same informal notebook-style bookkeeping. To you, it feels like a minor administrative oversight, but to HMRC, it's a statutory failure. And trust me, they do not view it with leniency. The financial danger here compounds incredibly fast. Miss a monthly CIS return deadline by just one single day, boom, that triggers an automatic £100 fine. Zero grace period. If those reporting failures persist, those fines can escalate to an agonizing £3,000 every single month. And it gets worse. HMRC can legally claw back unremitted tax directly from your company accounts. But perhaps the most devastating blow? They can strip your business of its gross payment status. Losing that means your clients suddenly have to deduct 20 or 30% straight from your invoices. That will instantaneously destroy your company's cash flow. No business wants that. Section 2, understanding the CIS framework. Let's break down the actual mechanics of the scheme so we can build a rock-solid defense for your operations. So what exactly is the construction industry scheme, or CIS? Basically, it's a withholding framework HMRC set up specifically to tackle informal cash-in-hand payments and tax leakage in the construction sector. HMRC essentially decided, look, we can't always rely on subcontractors to declare all their income at the end of the year. So they shifted the burden. By placing the statutory duty of tax withholding squarely on you, the paying contractor, HMRC guarantees they collect income tax and national insurance in real time. Make no mistake about it, you are effectively acting as HMRC's unpaid tax collector for the labor in your supply chain. Now, this is a really interesting nuance. Who actually counts as a contractor? As a painting and decorating firm hiring subbies, you're a mainstream contractor. That's obvious. But you need to be hyper aware of your clients too. Non-construction businesses, think retail chains, local authorities, or housing associations, they become what's called deemed contractors if their cumulative spend on construction tops £3 million within a rolling 12-month period. If your client hits that threshold, they suddenly have to operate CIS on your invoices. As a director, you have to actively ask your larger commercial clients about their recent construction spend. Otherwise, you're risking a massive unexpected cash flow shock when it comes time to settle your bill. If your limited company is the one paying subcontractors, you must follow this strict, non-negotiable sequence. 1. Register your business with HMRC as a contractor before making any payments. 2. Verify the subcontractor with HMRC to get their specific deduction rate. 3. Deduct that exact statutory rate from the labor portion of the invoice and only the labor portion. 4. Submit your monthly return by the 19th of every month, even if it's a nil return. I literally cannot stress this enough. Verification has to happen before the first payment. If the money leaves your business bank account before you verify that subby, you've already broken the law. Section 3. Inside or outside CIS. This is exactly where painting directors frequently get tripped up. It is a hugely dangerous assumption to think the line between in-scope and out-of-scope work is just common sense. So I'll ask you, is all painting and decorating treated exactly the same under HMRC rules? Because applying a blanket one-size-fits-all rule across all your commercial jobs is exactly what triggers an audit. And the answer to that question, it's a definitive, resounding no. This insight comes straight from the official HMRC CIS 340 guide. Under Section 74 of the Finance Act 2004, painting or decorating the internal or external surfaces of any building or structure is firmly inside CIS. That covers your standard commercial painting, sure. But look closely at the legal exclusions. Tasks like traditional sign writing or painting purely artistic murals and sculptures, those are explicitly excluded by law. If you apply a standard CIS deduction to a specialist signwriter's invoice, you are actually acting contrary to the legislation and improperly withholding their hard-earned funds. So the absolutely crucial point here is that context is everything. Check out this stark comparison. Say you hire a specialist subby to do some French polishing. French polishing a built-in, fixed wardrobe inside a property, that's inside CIS, purely because the item is physically fixed to the building structure. But French polishing a detached chair off-site in a workshop, that's entirely outside CIS. I know, it might sound totally mad that the exact same physical movement of a brush by the exact same tradesperson is taxed differently. But in HMRC's eyes, the item's relationship to the permanent fabric of the structure changes the whole shebang. You also need to know these other critical out-of-scope exceptions to classify your supply chain properly. Purely domestic clients, meaning a private homeowner hiring you directly to decorate their personal house, are outside the scheme. Vital to remember if you do residential work. Pesticidal or insecticidal wood treatments, formally excluded. Professional interior design consultancy, as long as they aren't doing the physical manual labor on site, exempt. And spatially, any operations carried out on ships or marine vessels are excluded, even if your subbies are literally painting the hull. Knowing these specific nuanced boundaries is going to save your administrative team massive headaches. Section 4. Let's look at the VAT Domestic Reverse Charge Rules, or DRC. If you are VAT registered and you're supplying CIS regulated services to another VAT registered business, the DRC applies. Let's look at how this shift actually works in the real world. On a typical £5,000 labor invoice under standard VAT rules, the decorator charges 20% VAT, taking the gross total to £6,000. The decorator holds that extra £1,000 in their account until they pay HMRC, right? But under DRC, the decorator invoices for £5,000, charges 0 VAT, and just writes DRC applies on the invoice. The main contractor then self-accounts for that £1,000 of VAT on their own return. The actual cash never passes through the subcontractor's hands. That drastically alters your cash flow forecasting because you no longer have that VAT sitting in your accounts buffering you prior to your quarterly return. Here is a huge professional tip for you regarding the financial realities of this scheme. Maintaining proper records is absolutely essential for each HMRC compliance. Because that standard 20% CIS deduction is taken from gross labor earnings, a lot of decorators effectively overpay tax throughout the year. If you want to claim allowable expenses at the end of the tax year and secure the refund you're rightfully owed, you have to meticulously retain material receipts from trade suppliers. I'm talking your Dulux Trade, Brewers, Screwfix receipts. Keep them for at least 3 years. If you can't prove the material costs, HMRC will just assume the entire invoice was taxable labor, and you'll lose out. Section 5. Compliance and ATA support. Here is how we can actively protect your business. When you finally verify a subby, HMRC's system will immediately spit back one of these 3 rigid rates: 20% if the subcontractor is registered and verified, 30% if they are unregistered, which is essentially a really harsh, punitive penalty rate, or 0% if they hold gross payment status. Listen to me. You, as the company director, have absolutely no discretion here. You must apply the exact rate HMRC gives you. Deducting 20% from an unregistered worker just because, well, that's the rate we've always used, is a one-way ticket to an incredibly invasive HMRC audit. To completely shield your limited company, you need to implement this actionable framework today. Make HMRC verification a mandatory, non-negotiable gate before you ever onboard or pay any subcontractor. Demand that your subbies strictly and accurately separate their labor from their materials on their invoices, because remember, CIS deductions legally only apply to the labor chunk. Ditch the manual spreadsheets. Use modern CIS compliance software to automate your monthly returns, because HMRC's digital reporting requirements are only getting stricter. And critically, make a habit of reconfirming everyone's status annually just in case their standing with HMRC has slipped. I want to leave you with this provocative question. I want you to urgently evaluate your own business today. Is your supply chain hiding a compounding HMRC liability? Seriously, take a hard look at your recent bank runs. If you've got unverified workers receiving cash, or you are carelessly blurring the lines between materials and labor on your invoices, the answer is very, very likely yes. And remember, when HMRC inevitably comes knocking, that liability rests entirely on your shoulders as the company director. But listen, you do not have to navigate this insanely complex web of legislation alone. Contact Atlas Tax Advisors today. We can comprehensively review your CIS processes, ensure your VAT DRC applications are flawlessly executed, and fiercely protect your operating margins. Give us a call directly on 07404 427 275, drop us an email at info@atlastax.co.uk, or visit our website at www.atlastax.co.uk. And please hit subscribe on the ATA YouTube channel for more essential real-time tax updates tailored specifically to help UK SMEs like yours. Just wrapping up, please carefully note this quick legal disclaimer. This explainer is for educational purposes only and does not constitute formal financial, accounting, or tax advice. Look, every business situation is totally unique, and HMRC rules and statutory thresholds are always evolving. So always seek professional guidance from a qualified accountant for your specific commercial situation. Thank you so much for joining me for this explainer. We really look forward to helping your painting and decorating business thrive, securely and fully compliant. See you next time.